Let's get more reaction from CNBC contributor Jim Stewart. He's a New York Times columnist who literally wrote the book on Disney. Jim, always good to see you.
Nice to see you, Melissa.
It was a great quarter, but it's losing a lot of money to get these subscribers.
Yeah, I mean, everybody's commenting on the big successes, and they deserve the credit for that. But that loss in Disney Plus is alarming. I mean, the bigger it gets, the more it seems to lose, and that is not a trajectory that can continue. They are projecting a profit for the core Disney Plus in fiscal 2024, which gives them some time, but the spending rate and the revenue lines right now are not pointing in that direction. So I think the big questions are going to be, can they somehow hold down this nuclear arms race spending on content, and how much more revenue can they generate with this new pricing strategy?
Why wouldn't Disney get the same free pass that Netflix had for almost forever in its history?
Well, first of all, it's not a pure streaming business. It's probably counting its blessings. It's got the theme parks coming back, surging like that, which is both good and bad. The theme parks revenue is never going to get a multiple like Netflix has. It's a mature business. It's very predictable, but it's not. It doesn't have huge growth potential. Whereas streaming maybe does, and like Amazon got a pass for years. Netflix is not getting the pass that it did in its heyday recently. I mean, I think that investors are kind of rethinking this, but that's one reason Disney is never going to get that same kind of multiple. Can they get a multiple on the revenue from that? I think they're getting some of that and some benefit from the doubt. But with these mounting losses and the spending rate the way it is, I think investors are growing a little more concerned about just, how profitable is streaming going to be and when, how soon.
Hi, Jim. Bonawyn here. Would you mind speaking to ESPN and the streaming sports offerings and how the pricing in terms of sports rights bodes for Disney going forward?
Yeah, well, that's another cloud over this, and they haven't said much about that yet. And I was a little sorry when they changed their reporting method, so they bury. I mean, you can't really see ESPN in there anymore. They don't break out the cable network. It's all put together in the media and entertainment numbers. So it's hard to say what's going on there, but it doesn't look great. I mean, there wasn't big revenue growth in that area. There was some substantial profit growth in the big media number. But a lot of that probably came from the studio. So it's really kind of hard to say. There seems to be no doubt that the old cable model is in long-term secular decline. And that's a problem for ESPN, which still contributes. Look at the numbers in there. That's still a big, big chunk of the Disney revenue. So do they start to migrate that to streaming? Well, they haven't done it much. And, everybody knows streaming is probably never going to be as profitable for sports as the cable model was. And you've got growing competition there. Everybody wants to get into it. Amazon wants in, Apple wants it. You've got some deep pockets that want to bid for these sporting rights. They're going to face some big cost increases for the big premier sporting events coming up.
What do you think of the ad-supported tier, Jim? I mean, it now enters the fray of streamers who are offering some sort of ad-supported model at a time when advertising revenue in general is slowing. It's just interesting timing, for these things to hit the market as this industry is sort of contracting.
Well, I think they were hoping to be able to introduce this when we weren't on the brink possibly of some kind of big slowdown or even a recession. I think the advertising model is a very, very smart move. It does two things. One, it doesn't really jeopardize the subscribers because they can pay the same and get the advertising thing, so that's not a big price increase for them. And secondly, to the extent they're harvesting all this data, which is supposedly what streaming is supposed to be able to do, they may be able to deliver very sophisticated targeted advertising that could compete with the Googles and the Metas and the Facebooks of the world. So strategically, it makes perfect sense. The timing is not great. I think we're going to see when they introduce this just how price sensitive these streaming services are. I think people are combing through their monthly bills. I did it myself last weekend and realized, oh my God, I've got all this monthly stuff I never look at. And I think people are going to be more cost conscious about that. But I think long term, look, with the cost they've got, as I mentioned, these trajectories, the losses in Disney Plus, they can only do two things. They can either cut costs, which is very hard in this environment, or they've got to increase revenue. And adding an ad-supported tier is one way to increase revenue.
Jim, always great to speak with you. Thank you.
Sure, my pleasure.
Jim Stewart of the New York Times. Courtney, what do you make of Disney here?
Actually, I think Disney, clearly they blew away expectations here, which I think is great, but I do like them from the longer term because I do think they're looking at them. They are expecting that core customer on the subscription side that is going to actually hopefully meet their expectations. And you're comparing that to like a Netflix who just lost subscribers or a Peacock who didn't have any. So I think they have a lot more room to run there. They're also a much better diversified business. When you look at them, they have their advertisers, they have their parks business. I don't think it's a bad thing to look at by any means.
Would you rather, which is a game we haven't played in a while, Disney or Netflix, Dan?
I don't think you chase Disney here. I said that as our final call last night. I wouldn't buy it into things. I didn't say sell it. I said I wouldn't buy it into the print. And I think anytime you have the opportunity to kind of beat those subscriber expectations, but then lower the out year, I think that's a good setup, and the stock is obviously up. So long-winded answer, right? Are we playing a game? We're
yes,
playing a little bit.
That's why I set to be.
I'm not a buyer of Disney at 120 here. I think in a different market, it's probably not trading up $8 on this report. And was it versus Netflix? Is that what you said?
Yes.
No? Oh, there's a big.
Thank you for listening to me.
So I had bought Netflix a couple months ago, and I just sold it. We're going to get into that later in the show. But there's a big gap in Netflix. And if we are in a squeezy market, look at that chart. There's a gap from that, that disappointment a couple months ago. So better trade there.
You didn't know what we were doing. No, you didn't listen to me. You didn't know what the choices were. There were only two choices.
Well, at least I didn't bring back the guest.
Choices. That's true. Bonawyn brought back the guest.
Oh, that is so low.
Sorry about that.
Guy, Netflix or Disney?
I'll play the game correctly, Melissa Lee, because we've been together a long time, and I know you're a rule follower and a rule enforcer. I would rather Disney at these levels. Netflix had its run. Disney's about to have its DIS, Mel.